profitable. Okay, you learn from them and then you are profitable. Thank you so much.
All right.
And at this point, peace out.
Yes, I want to say peace out because you just calmed me, man. You told me when I asked that, well, I'm going to get something, and you just haven't said anything about it.
I was more, I think I was more concerned about you giving. You did great.
Good morning, guys. Good morning. How are you doing today? Sure you had a wonderful weekend. Can you hear me? If you can hear me, please drop a comment. How are you doing today? How was your weekend? Good to have you in today's session. If you have any question, please drop it in the comment section. If there is any pair you want us to look at together, please drop it in the comment section. How are you doing today? What is your plan for the week? What's your trading plan for the week? Drop it in the comment section. Which instrument are you considering trading this week? Let me know in the comment section. You're welcome, you're welcome, you're welcome, you're welcome, you're welcome. So as you can see today, the major news, okay? Today is bank holiday in the US and also Canada, so we should expect much volatility in the market today. Okay? You don't expect much volatility, and what I advise that you do on days like this is trade less on days like this. Okay, trade less. You should reduce your risk on days like this. Okay, when there's bank holiday, reduce your risk. Don't over leverage. Okay, some people avoid trading when there is holiday, but for me, when I see my trade setup, I execute the trade. But I trade less volume when there is holiday, and that's what I would advise that you do also. I hope it's clear. So tomorrow we should expect high volatility. I think there's a major news, United States, okay, yeah. By 3 p.m. ISM manufacturing PMI will be released. So if you can avoid trading today, good. Okay, you wait for tomorrow's news. Okay, but like I said, if you're trading today, trade less. Okay, reduce your volume. I hope that is clear. Can you hear me? Can you hear me? Let me see your comments if you can hear me. Okay, Mr. Bolaji, good morning. Good morning, Onyinye, good morning. So if you have any question, any pair you want us to look at, please drop it in the comment section. For those of you who joined the session that was on Saturday night, by now you should be making some good points. Gold, Euro, Australian dollar, and Australian dollar, USD. I told you guys what you should look out for. So by now, I believe you have taken your trades and you're in profits. Okay. If you want to be joining the weekly market outlook session, you should register an account, open an account with Cabana Capitals. Okay. If you want to be joining the Zoom session. Okay, so let's go to the charts. Let's go to the charts. I currently have a trade on Australian dollar USD. It's in profits. Let's check it out. Okay, I'm bullish on Australian dollar USD. It's in profits, and also on I think Euro Aussie. I'm also bearish on Euro Aussie, and Euro Aussie also is in profits. Okay, so my bias for Euro Aussie today is bearish, but for the week, my weekly bias is bullish. Okay, so what I'm currently trading now is pull retracement to a discount level. That's what I'm currently trading right now. Retracement to a discount level on Euro Aussie and retracement to a premium level on Australian dollar USD. Okay, so let's start with gold. Okay, so this is my expectation on gold. Let's start with the weekly time frame. Remember how last week candle close will determine the direction for the week. How last candle closed, the formation, the candlestick pattern on the weekly will determine the direction for the week. It's that simple. Don't complicate things. Okay? Don't complicate things. How did last week candle close? It closed bearish, and not just a bearish candle. You can see it. This is a spining top, a bearish spining top. You can see, and the that closed before it The candle before it is an hanging man. That's a bearish reversal pattern. That tells you that expect more bearish move this long. Okay, you should expect more bearish move on gold this week. But for today's market, if you're trading gold today, I would suggest you buy. I'm expecting gold to pull back to a premium level. I'm expecting gold to fill a fair value gap before going bearish. So for today's market, my bias for gold is buy. Okay? Is buy. Let's see what is happening on 4 hour. Jeremiah, good morning. You're welcome. Let's see what's happening on 4 hour. Okay, so you can see what's happening on 4 hour. Gold. You can see gold is being bullish. Why is it buying? As you can see, why is gold bullish? Candlestick pattern, simple. At this point, we had a doji, and after the formation of a doji, you had a spinning bottom, bullish spinning bottom. This was a bullish. Okay, this is a bullish setup. Now, this pattern formed on Friday, right? And a lot of retail traders would have executed the trade buy after the formation of this spinning bottom, this bullish spinning bottom. And where would they have their stop loss? Their stop loss would be the low of this candle or a few pips below the low. And you can see what they've done today. The first thing they did was to go clear liquidity. You can see. So if you had executed the trade last Friday before the close of the market, by now they would have kicked you out. Your stop loss must have been hit, right? So that's the game. That's the game. The institution will always go for liquidity. That's why you be patient as a trader. You have to be patient. If you are the impatient type of trader, you will always be the liquidity in the market. You will always be the liquidity in the market. So you have to be patient as a trader. If you rush the market, you crash your account, you will blow your account. So you have to be patient. So you can see, so what they did this morning was to clear liquidity. Liquidity has been cleared. Now look at the pattern that formed after liquidity got cleared. The pattern that formed on 4 hour. This is 4 hour. You can see the next candle closed as a inverted hammer. So one would have entered buy after the formation of this inverted hammer. If you are buying gold current market price, you are late to the game. You are late to the game. You'll be taking more risk if you buy right now. So you either wait for price to pull back to this level where you ought to have entered, or just let the trade go. Accept that you've missed that opportunity. Okay, gold is still bullish, but if you jump in right now, you would be risking more. Okay, so I'm patiently waiting for price. You can see my heart. I posted this on my status the early hours of today. You can see this. I'm expecting price to pull back to this area or this level where I should have entered buy. If price does not pull back to this area, I will not trade. No trade on gold. No trade on gold. Okay, so that's my take on gold for today's market. It is bearish. You can see a fair value gap that was created. I told you guys I'm hoping that gold will pull back to this fair value gap. This fair value gap that was created on 4 hour. I'm expecting gold to fill this fair value gap. So this is where I'll be considering selling gold. Okay, this is where I will be considering gold premium level. That is where I'll be considering selling gold. I hope it's clear. So gold is bullish for today's market, but wait for price to pull back. If you haven't entered a trade on gold, if you are not currently buying gold, patiently wait. Patiently wait. Okay, you can go in if you are comfortable with the risk. I think if you from this current market price, your stop loss will be here. So the risk is 898 from 25. That's about 240. I think I'm already at 140 pips. So if you are okay with such risk, then you can go ahead and buy gold. But I'm patiently waiting for gold to pull back to this discount area before buying. It should pull back. Okay, you could look out for that setup in New York session. Okay, so that's it for gold. If there's any pair you want us to look at together, please drop it in the comment section. I hope that is clear on gold before we move to the next pair. Okay, so let's move to the next pair. Let's see GBP USD. I know most of you trade GBP USD. see GBP USD. So GBP USD has been in a range since Friday, right? It has been in a range. After the formation of this armor, you can see GBP USD has been in a range. Okay, now this armor indicates change in trend from bearish to bullish, right? Armor indicates change in trend from bearish to bullish. So we should be looking for opportunity to buy GBP USD today. Long term, for the week, my bias for GU is bearish. Okay, you can see the structure we have here. This is a bearish structure. This is an high, low, lower high, lower low. So this is a bearish structure, and there was a shift in market structure at this point. Okay, there was a shift in market structure from bullish to bearish. So I'm hoping GU will pull back to fill this fair value gap that was created on 4-hour time frame, this fair value gap. So I'll be considering selling GU from this point or this area. This is where I'll be considering selling GU. Okay, it depends on how the candlestick, the formation of the pattern that form in these areas, in these zones, will determine if I will go bearish on GBP USD. Okay, so for today's market, okay, like I said, we shouldn't expect much volatility today. We shouldn't expect much volatility. So price can just be in a range all through the day on GBP USD because of bank holiday in the United States. So, but if you still want to trade, I would suggest you go for buy and not sell. Go for buy. Let's go down to lower time frame. 1 hour. Okay. So you can see the pattern we have here on 1 hour. This is a bullish reversal pattern. You can see we had a bearish spinning bottom and the next close bullish. At this point, you can see the pattern we had here. This is an armor, so these are bullish reversal patterns. Okay, these are bullish reversal patterns. So if you want to buy, I would suggest a resistance has been created on 1 hour time frame. So if you want to buy, wait for that resistance to be broken before you buy. Okay, you should wait for price or a candle to close above this level before you buy. And if you are buying, set your stop loss 10 pips below this low, 10 pips below the low of this candle, and you could set your TP. You could use this level as your TP, or you use this previous high. This is an area of liquidity. Okay, you can set your TP at this point, but I would suggest your first TP should be at this level. Okay, your second TP should be at this level. That's my take on GBP USD. For the week, GBP USD is bearish. Let's start from the weekly time frame. You can see on the weekly time frame, last week candle looks like a spinning top. Okay, it looks like a spinning top. It's bearish. And what happened last week? You can see what they did last week was to clear liquidity residing at this previous high, and that they have achieved. So you go down to, let's see, daily. So you can see what we have here on daily. At this point, you can see we have a spinning top, and at this point, a lot of retail traders would have jumped in. The impatient traders would have jumped in to sell. And where would they have their stop loss? Their stop loss would be residing at this previous high. So what they did, I think this was on Monday, Tuesday, I think on Monday, the first thing they did was to clear liquidity. Last Monday, what they did was to clear liquidity, and you can see now it's created at this point, and you can see that the market is trading below this support. That tells you that supply is higher than demand, and when supply is higher than demand, you expect price to drop, right? You expect price to drop. Now on daily, you can see what we had here. Can you see this? This is a spinning bottom, right? This is a spinning bottom, so a support has been created at this point on the daily time frame. Support has been created at this point. See why you should consider buying. Okay, support has been created at that point. If this support gets broken, okay, if this support gets broken, then we should expect more bearish move on GBP USD. It's that simple. Don't complicate things. It's that simple. With just candlestick pattern, if you know how to identify this pattern, you make all the money you want to make from the market. It's not about how many indicators you have on your chart. Okay, it's not about how many meters. Okay, it is said that too much analysis result to analysis paralysis. It's the reason most of you are not making money in the market. Too much analysis. You know too much. Too much. That's why you're not making money. Keep it simple. Keep it simple. If you want to be profitable in this market, just keep it simple. Okay? So that's my take on GBP USD. Any question? Is that clear? Is that clear? Do you have any question? Is that clear? Okay, let's move to the next pair. Euro USD. EA, okay. Someone said we should look at EA, okay. Jeremiah, EA. I already dropped the analysis on the WhatsApp group now. You saw it, right? I already dropped my bias on Euro Aussie. So, like I told you guys, I'm bullish. I'm selling Euro Aussie at the moment, but for the week, my bias for Euro Aussie is bullish. But I'm selling Euro Aussie at the moment. Okay, I'm selling Euro. I want euros to pull the discount area before going bullish, and they might likely clear residing at this low before buying, before going bullish. So that's my expectation on Euro Aussie. This low here is danger zone. It's an area of liquidity. As you know, a lot of retail traders have executed buy after the formation of this spinning bottom. And where would they have their stop loss? Stop loss is at this level. So there is a high probability that they will come for this level. Okay, so if you're taking a buy trade on Euro Aussie, your stop loss must be below this level. Okay, so you can see I'm currently selling Euro Aussie because I'm hoping that this liquidity will be cleared. This liquidity will be cleared before going bullish. Okay, so let's go down to, so after the formation of that spinning bottom, I think that was on Thursday or Friday. Let's go down to 4-hour time frame. So you can see the pattern we have on 4-hour. Okay, you can see our last 4-hour candle close. This looks like a spinning top, right? It looks like a spinning top. Can you see this? It looks like a spinning top. So after the close of this 4-hour candle, let's see the pattern we had on 1 hour. So you can see the pattern that formed on 1 hour. This is a bearish reversal pattern. We had on 2 doji candle. You can see bullish and bearish, and the next candle engulfed the doji candles. You can see it closed below of the doji candle. You can see. So after price dropped, okay, this support also, I think, yeah, it was broken. This support was broken. So what happened there? Price had to pull back to this fair value gap. You can see this fair value gap that was created here. Price had to pull back to fill this gap. And what happened after filling that gap? Price started going bearish. So if we go based on what we have on 4-hour and 1-hour time frame, we should go bearish. There is a high probability. There is a high probability that they will come for stop losses residing at this low. There is a high probability. Okay, so that's my take on Euro Aussie. And join me in the sell. You can see my SL. Okay, this is my SL, which is about I think 30-35 pips from my entry level. Okay, and my TP 1.6253. That's about 55 to 60 pips TP. Yeah, no, it's more than that. That's close to 90 pips, close to 90 pips profits. So I'm risking 35 pips for 90 pips reward. That's a good risk reward. Okay, so you can join me. Not too late, though the market has moved close to how many pips? Close to 20 or 30 pips in my direction. So you can still join. It's just that your risk, if you're executing a sell now, your risk will be high, be higher than mine. So that's my take on. Your risk will be high and your reward will be low. Right? Risk will be high, reward will be low. Okay, so if you're okay with that, you can go ahead and execute sell trade on Euro Aussie. Okay. During every live session, I will be giving you signals on Euro, Aussie, and Australian dollar. Okay, henceforth. Okay, I'll give you signals on Euro, Aussie, Australian dollar, at least one call every day. One call every day. And if you want to be receiving the signal on WhatsApp, okay, you want to know when you want to execute the trade the same time I execute it, you have to join the WhatsApp group. And to join the WhatsApp group, you need to have an account, a funded account. I'm only interested in people who are serious about this business, who are ready to make money. I'm not interested in people who are doing demo, or I'm not interested. So if you are serious about making money, fund your trading account with a minimum of $100. A minimum of $100. I will add you to the WhatsApp group. I'm not talking about existing clients, whether you are existing or not. If you have funds in your trading account, top up with a minimum of $100, and you'll be receiving signals on Euro, Aussie, and Australian dollar. Not every day. When there's a good setup, I will drop the signal on the WhatsApp group. Okay, so if you have an account, fund it, and you have access to those signals. Okay, but on the live call, I just drop maybe one call, maybe every day, one call. So, but if you want to be getting, signals on different pairs, then you should fund your trading accounts with Cabana Capitals. Okay, so that's my take on Euro, Aussie. I'm not there yet to play. Okay, you want to make money, you've got to be serious. Okay. Let's move to the. I hope that is clear, Mr. Jeremiah, on Euro Aussie. I hope that is clear. Which other pair do you want me to? Guys, which other pair do you want us to look at together? Let me know. Let me know. Let me know in the comment section. Okay, let's look at one of the JPY pairs. JPY. Let's start with USD JPY. Okay. So let's start with the weekly time frame. My bias for Euro for JPY pairs this week is bullish. Yeah, my bias for you are buying EA. Jeremiah, you are buying EA. Okay, just ensure that your stop loss is far from that low. Okay, because we might come for your stop loss. Just ensure that your stop loss, if you are buying EA, like I said, this week my bias for EA is buy. Okay, but I would execute buy after liquidity has been cleared. So if you are buying, ensure that your stop loss is far from that low. Okay, ensure your stop loss is far from that low. Now looking at USD JPY. USD JPY is my bias for USD JPY this week is bullish. Why? Why am I considering buying USD JPY this week? Now, if you look at the pattern that formed there on the weekly time frame, you can see we had here. This is an hammer. This is an hammer, and this hammer was used to clear liquidity. Okay, this hammer was used to clear liquidity. Now, also, you would notice that we had a fair value gap here. Shine your eyes well, you go see them. You go see the fair value gap. Can you see this? So what we had there is not just an hammer. That hammer formed at a key level. It was used to fill this imbalance. Can you see that? Okay. Now, after the formation of this hammer, because you are wondering, why did price pull back? Okay, instead of going bullish, why did price pull back? I'm sure a fair gap was created after the formation of this hammer. Okay, I'm sure fair value gap was created. That is why price had to pull back. So let's go down to lower time frame. Let's be sure. Let's see. Okay, so this is what we had on. This is daily. Let's go to 4 hour. Okay, let's go to 4 hour. So 4 hour, we had a fair value gap here on 4 hour. Let's go to lower time frame. This was a fair value gap on 4 hour. You can see this fair value gap on 4 hour, but market closed as it's trading below this fair value gap, so we shouldn't work with this anymore. So let's go down to lower time frame. Let's go down to lower time frame. 1 hour. Okay, let's see. I'm sure there's a fair value gap below. Okay, On 1 hour, we had a fair value gap here on 1 hour. Can you see this? Okay. Can you see the fair value gap? That's the gap in between the high of this candle and the low of this candle. But it got filled at this point, right? It got filled at this point. So let's see go down to lower time frame, 15 minutes. Let's go down to 15 minutes. Please, if you are yet to like the stream, please do. Give it a thumbs up. If you get value from this live stream, give it a thumbs up so that others can get to see this video. Okay. Let's see. Okay, so on 15 minutes, you can see 15 minutes we had the fair value gap here. This is the fair value gap on 15 minutes. I believe price has also filled this gap. Okay, I believe price has already filled this gap also. But I don't want to go down to 5 minutes or 1 minute time frame. But I'm sure there is a fair value gap below this 15 minutes time frame. I don't want to go down to 1 minute. So let's go back to 1 hour. So 4 hour, okay? So I think that's the reason for this pullback, okay? This bearish move was to fill a fair value gap, and that they have accomplished. So this would have been a good entry for USD/JPY, okay? After the close of these candles, this would have been a good entry. If you had not entered buy on USD/JPY from this point, this would have been another opportunity to buy, okay? And now the market is currently trading is about 100 and how many pips? 190 pips. Yeah, 190 pips from this point. This is where you ought to have entered. Now the market is trading 190 pips at that level. Why would you want to be and buy now? Why would you want to buy now? FOMO. That's the only reason you want to execute buy on USD/JPY. Okay, USD/JPY is bullish. Okay, probably they are coming for stop losses residing at this high. Okay, this equal high. There are stop losses residing at that level. They are most likely going to go for that SL. But if you look at it, if you are buying from this point and you are setting your TP at this point, the risk reward here will be 1-to-1 or less than that. 1 to, let's say, 0.8 or 0.9. Okay, so I would suggest you wait for price to pull back a little. Wait for price to pull back to a discount area before you buy. That's my take. Okay, before you buy, wait for price to pull back. Okay, you can see a fair value gap was created here. You could wait for price to pull back at least to this area. Don't jump in and buy for the current market price. If you want to buy, wait for price. This fair value gap that was created here, there was a shift in market structure here, or break of structure, right? This candlestick closed above this high. That's a break of structure, right? You wait for price to pull back to this fair value gap that was created here before the break of structure, before going bearish. Sorry, go bullish before you go bullish. Exactly. So that's my take on USD/JPY. This week I'm looking for buys on USD/JPY. I'm looking for buys on USD/JPY. I hope that is clear. I hope that is clear. Do you have any question? Do you have any question? Do you have any question? Is there any other pair you want us to look at? Okay, someone said GJ. GJ. Let's see GJ. Okay, that will be the last pair. If there's any pair you want us to analyze, please drop it in the comment section. Okay, so let's look at GJ. GJ also is bullish. Let's start with the weekly. So you can see the pattern we have on GBP/JPY is similar to what we saw on USD/JPY. Okay, they are positively correlated. So if you are considering buying USD/JPY, you should also consider buying GBP/JPY. They are positively correlated. So GBP/JPY is likely going to come fill this fair value gap. Okay, so price is currently at discount, and at discounts you don't sell. You don't sell at discounts. You buy at discounts, you sell at premium. Keep it simple. Buy at discount, sell at premium. Okay, so if you are considering selling, you should wait for price to pull back to this area. This is where you should be considering selling. But as it is right now, you should look for buy opportunity. Look for buy opportunity. So same thing applies on GBY. Wait for price to pull back before you buy. Okay, don't jump in. Wait for price to pull back. If price does not pull back, let it go. Okay, let it go. Let it go. Wait for the next good opportunity to sell. If price gets to a premium area, a premium level, then you go bearish. Okay, if you are buying now, your risk will be high. You will take more risk buying from the current market price. I hope that is clear. I hope that is clear. So if there are no questions, we'll have to end the live stream. No question, no question. If you are yet to like the stream, please do. And if this is your first time joining, please subscribe to the channel so that anytime I come online, you get notified by YouTube. Okay? So this week is NFP week. Let me remind you guys. This week is NFP week. So you need to know what you're doing this week. This is not the week to over leverage. Okay? If you don't over leverage, stick to your risk management rules. Okay? Stick to your risk management rules. If it is 1% risk you're taking on a trade, stick to it. If it is 2%, stick to it. Okay? Don't try your luck. Don't try your luck. Okay? Stick to your trading plan. Stick to your trading plan. And you make money from the markets if you stick to your trading plan. Most of you are not. Some of you don't even have a trading plan. And if you don't have a trading plan, forget about making money from trading. Forget about making money from trading if you don't have a trading plan. Most of you don't have. That is why you are struggling in the market. Go and create a trading plan. Okay? Create a trading plan and stick to your trading plan, and you start making money from the market consistently. So that's all I have for you guys today. Okay? I hope to see you guys in tomorrow's session. Do have a wonderful day. Bye for now.